Tesla Incorporated just officially announced a stock split. There have been ups and downs since the beginning of the year, but Tesla's stock is finally up 63% over the last 12 months, trading at over $1,000 per share and with a market worth of over $1 trillion. Tesla's stock price rose 7% as a result of this announcement, and investors are very optimistic about this outcome as the stock split provides an opportunity for more people to buy into the leading electric vehicle brand. What is a stock split? What does this mean for investors in the future of the brand? Why are some analysts against it? Keep watching to find out. Analysts and investors were upbeat after learning that Tesla was setting the framework for its second stock split in 2 years, with shares rallying 8% higher. Following the 5-for-1 stock split that was announced in August 2020, the electric vehicle maker announced its plans via a tweet on its official Twitter. According to a document released on the 27th of March, Tesla intends to split its stock so that it can commence paying a stock dividend to stockholders. As stated by the Securities and Exchange Commission filing, the electric car company would request an increase in the number of authorized shares of common stock to permit a stock split of the company's common stock in the form of a stock dividend at its annual shareholders meeting. Additional information of the annual meeting will be released in a definitive proxy statement, according to the company. More information will be revealed during Tesla's annual shareholder meeting. Although no date has been set, the decision is apparently based on Tesla securing permission from its shareholders for the split. Tesla stock had been on the rise since the firm revealed it had gotten German government approval to deliver the first cars made at its new factory outside of Berlin. Since closing at $766.37 about 2 weeks ago, the stock has gained approximately 32%. You might be wondering, what is a stock split? We'd have to first explain how stock dividends work. A stock dividend is a dividend that is distributed to shareholders in the form of new company shares rather than cash. These payouts have little effect on the company's worth, but they dilute its stock price. The upcoming Tesla split would take the form of a stock dividend, which would provide additional shares to stockholders. In other words, if there's a 6-for-1 split, investors will receive a stock dividend of 5 Tesla shares for each one that they own. This would be a once-in-a-lifetime opportunity. The electric vehicle manufacturer did not specify how many shares investors would receive, though. A number of other high-flying tech stocks, notably Amazon and Google owner Alphabet, have lately announced splits. Since the beginning of February, both companies have announced intentions for 20-for-1 stock splits. Companies usually announce stock splits when their stock has appreciated greatly in value in order to make their price per share more reasonable. A stock split increases trading by making the stock more accessible to smaller individual investors. Stock splits do not have a significant impact on a company's value. Yet, by lowering the price shareholders must pay to purchase a single share, they can raise demand and consequently the stock price. This may seem unnecessary as a growing number of brokers are now giving individual investors fractional shares in high-priced equities like Tesla. Therefore, a stock split isn't as important as it previously was, given the multiple options available. Applications like Robinhood and Wealthsimple allow the purchase of fractional shares. However, a split will not only make a stock more expensive to investors, but also help a company get into the Dow Jones Industrial Average, which increases a stock's value because many financial firms watch the index. Most firms do not want their individual share prices to rise too high. Without the original split in 2020, each Tesla share would have been worth more than $5,000. Tesla's stock rose 12.6% on the day that its previous 5-for-1 split went into effect in August 2020. Since then, the stock has more than doubled in value. However, the split occurred in the midst of Tesla's record run, which saw the stock rise 743% in 2020. Tesla is still a fraction of the size of most long-established automakers, even with its new operations near Berlin and Austin, Texas. However, Tesla's quick development and the expectation that the company will profit from an industry-wide move away from internal combustion engines and toward electric vehicles have spurred remarkable market value gains. Tesla's stock had risen by 18,084% through its close since October 2019, when the company went from a string of quarterly losses to an unexpected profit. Tesla is now worth more than the total market capitalization of the world's top 13 automakers. Some speculated that an announcement on the current stock split might have been made in December last year, but speculation calmed down after a disappointing product roadmap in January and the larger sell-off in growth companies that followed. However, a broader risk appetite has now returned in a dramatic way. boosting Tesla's stock price. One expert seemed to foresee this split. For months, Gary Black, managing director at the Future Fund with a $1,600 price target, has advocated for a stock split, believing that it would boost demand for the company. Recently, he reiterated his position, claiming that the stock splits were often done by well-managed corporations to show confidence in the future and to assist ordinary investors. Wedbush Securities Managing Director Dan Ives also believes that the electric vehicle manufacturer is on the right track. Ives said on Yahoo Finance Live that Tesla is in a massive position of strength right now in terms of where they're going from a production standpoint. They have that high-class problem of a 4-digit stock. He concluded saying that he believes there will always be controversy, but a stock split is a wise strategic move for Tesla, just as it was for Amazon, Google, and Apple, given how well the stock has performed since the last split. Following Tesla's grand opening in Berlin and the planned production factory in Austin, Texas, Ives says that the timing of the stock split announcement is bullish. He added that as the company moves through the first quarter, we'll notice an increase in momentum, particularly in the manufacturing sector. He then concluded by saying that despite all the commotion and competition, Tesla is the only game in town, at least in the realm of electric vehicles. David Traynor, CEO of investment firm New Construct, argues that when the stock split dramatically lowers the share price and unsuspecting retail investors inevitably pour in, the move threatens to further inflate what some stock watchers believe is a market bubble in the making for Tesla. Traynor believes that the lower price of Tesla as a result of the split may attract investors wanting to take advantage of the opportunity to buy, fueling what he sees as a bubble, which occurs when the price of a stock skyrockets, but it's out of proportion to the company's underlying value. Furthermore, he says Tesla's plans to pursue a stock split do not change the fact that the company's stock is trading at a, quote, totally detached from fundamentals value. Tesla, according to Traynor, needs to sell well over 16 million vehicles per year to justify its present stock price of well over $1,000 per share, despite the fact that it only sold approximately 1 million cars in 2021 and is nowhere near selling enough cars to warrant that price. According to the news sources, Tesla's production in its Chinese facility will be paused soon, and the electric car maker has not yet informed workers if the suspension will be extended. A 4-day stoppage of its Shanghai factory as the city prepares for a COVID-related lockdown may have an impact on output, as the company already faces a slew of supply chain issues. Based on the Giga Shanghai's theoretical output of 450,000 vehicles per year, a 1-week shutdown and subsequent week-long restart of production could result in the factory losing around 17,300 units of production. Traynor concluded by stating, "We urge investors to sell the Tesla rally because there are no fundamental upside drivers." According to the analyst, nearly every major manufacturer is working on an electric vehicle manufacturing strategy to compete with the electric car pioneer. He believes that in the electric vehicle space, Tesla's first-mover advantage is quickly vanishing. While Traynor does make solid points, we're inclined to disagree, as Tesla has a lot more going for it than just electric vehicles. There are indeed bullish catalysts. Tesla's macro projects are also expected to gain pace this year. For utilities under pressure to cut greenhouse gas emissions from coal and natural gas, battery storage for renewable energy is an appealing answer. In the San Francisco Bay Area, the 182.5 megawatt Elkhorn battery energy storage system was built by PG&E Corp and Tesla and is located at the utility's substation near Monterey Bay. Allegedly, it will be one of the world's largest utility-owned systems when it goes live later this year, capable of powering an estimated 136,500 homes for many hours, according to the company's website. Let's also not overlook the importance of innovation. We believe Tesla will always be one step ahead of its competitors due to its innovative and agile character, securing a larger share of the market than its competitors, which have a long way to catch up. What are your thoughts on the stock split? Do you agree with Ives or with Traynor? Comment down below.